The top business stories live from the Sky News City studio. I'll have an exclusive interview with David Potts, the Morrison's chief executive, as he prepares to leave the supermarket after 9 years at the helm. Sky News reveals the Premier League is planning to put a new £915 million distribution deal to a vote, despite clubs yet to agree to individual financial commitments. Plus, I'll ask the best-selling author Sir Ian Rankin why many of us feel we simply don't have the time to read anymore. Good afternoon, this is Business Live with me, Ian King. This month will mark the end of an era at Morrison's, one of the UK's biggest supermarket chains, where David Potts will be stepping down after 9 years in the job. Mr Potts has been praised for achieving a turnaround at Morrison's after a period of indifferent performance before steering the business through the pandemic. But more recently, there have been suggestions that the business has struggled to compete since its £7 billion takeover 2 years ago by the private equity firm Clayton, Dubilier and Rice, which added £6.6 billion worth of debt to the balance sheet. Well, joining me now, I'm pleased to say, is David Potts, the chief executive of Morrison's. David, good to see you this afternoon. What a time to have been at the helm. What are the big changes that you've seen in the industry over the last 9 years?
Oh, thank you, Ian, and thank you for having me today. Well, I mean, as you know, Morrison's is a great British business, and if I look back over those years, 9 years in March ahead of us, then I think there have been four sort of main things. When we arrived here in 2015, it would be fair to say the business is on fairly thin ice in performance terms and how it was sort of reinventing itself to be increasingly relevant. And as you know, retail is always changing. And I think that as Britain's biggest single food maker, which Morrison's is, and as British agriculture's biggest single supermarket customer, this business is very important to many, many stakeholders out with the 100,000 employees that we employ and out with our existing customer base. So turning the business round over those sort of turnaround years, I would have as really one of those top four efforts. I think clearly in retail, once you fix things, once you start to stabilise the business, you have to grow the business. And we've grown a significant convenience store business from pretty much zero back in, say, 2018, I think. And now in March, Easter 24, we'll be up to 1,000 convenience stores badged Morrison's daily under the ownership of this business, and a further 300 convenience stores within the franchise part of the wholesale business, which we've also launched. I think the third big effort, the third big achievement would be our shareholders within the public framework of the business as we went private enjoyed a 62% premium on their investment. Clearly, thank you to our shareholders then for investing in the company, and they were very pleased with that premium. The single most important achievement, I believe, in these last 9 years or so has been the way that we managed the business through COVID. And when the Prime Minister said, look, everyone stay home in this moment except key workers, we were anointed as key workers in the supermarket industry, including Morrison's, and we joined the National Health Service heroes as key workers in Britain. So we turned all of the assets pretty much on their head to play our full part in feeding the nation during those COVID years. And clearly, the British public will never forget that the industry did that in those COVID years, and Morrison's was right at the heart of it.
What about these suggestions, though, that you've had your hands tied by the takeover and all the extra debt the business has taken on?
Well, we've certainly had our hands full, actually, developing the supermarket business, opening new stores, lowering prices and developing the convenience store chain that I referred to a moment ago. Clearly, the business is more heavily indebted than it was, and part of the task of CD&R and Morrison's is gradually to deleverage against that debt level. But our performance, you'll have seen 5 consecutive quarters of positive like-for-like. We're now in week 1 of the new financial year, and we're feeling quite chipper about the year ahead of us. So, you know, I don't see signs of any either complacency within this business nor the management being, distracted in some way or other. Clearly, if you go through Brexit, COVID, the takeover, with a new team, then that can be distracting. But I think we're well through those days. Yeah.
Now, the British Retail Consortium reported yesterday that food inflation is now at its lowest level since July 2022. Do you think we're past the worst of it? Can we definitively say that?
I think we are. I think that this company, Morrison's, has been the right side of inflation compared to the industry by about 4 points in these last 5 months. If we look ahead to Christmas, which clearly is massively important that we have a good Christmas for customers and colleagues, then I think mid-single digit, 4 to 6% inflation, which is a third of what it was. It's half of what it was even in the summer. And I think that's what I'm projecting at Christmas.
Are you still seeing inflation at elevated levels in certain categories, though?
Yeah, I think there's a bit more inflation coming through on veg and some salad lines, which is partly the erratic weather actually that's been going on in recent times. And in normal times, it does ebb and flow across categories, right? But the trend is very much on the downward side of inflation. And I think, we've made some further price cuts this week. Next week, we're reducing our Christmas basket by £2 year on year, which is certainly worth having. And I think it's going to, 2024, we're budgeting for far less inflation going through.
Obviously, two of the big changes that you've made during your time was to take Morrison's more deeply into convenience and online. How much of a competitive advantage is that going to bestow against some of the hard retail discounters?
Well, it's very important to be where customers are going. And clearly the core supermarket business is really very important. It's where people meet other people. It's where the majority of our people work. But clearly online, whether it's the immediacy channel, where we work with Deliveroo Hot, we work with Amazon, we work with Ocado, is really, increasing. And convenience is really where we've placed a big bet from no stores at all in these recent years to 1,000 stores wholly owned in Easter 2024 with a further 300 through the franchise business. It's all badged as Morrison's Daily.
Tell us about your successor. What's going to be in his in-tray, do you think?
Well, I'll have a cracking Christmas, I think. Strong 2024, clearly scaling convenience and really building out the counters that this company has, the serve-over counters, Market Street, those things that, Ken Morrison started that customers still love. I think we've really got a competitive advantage there. And I think Rami's background really plays right into that space, and we're going to have a good look at it tomorrow together.
And what about you personally? I mean, you've been in this industry, man and boy, 50 years. What are you going to do next?
Well, certainly the next 50, I imagine. I think a short break. I've got family in Dubai, family outside London. Find out what I'm like outside, without the office, without the machine, the corporate machine. But I'm very much in the market to work. I intend to be a CEO or an executive chairman. I love England. I love the UK and the British Isles. But if you're brought up in Manchester, you're told to go where the work is, and that is what I intend to do.
Well, I can't imagine you'll be short of office. David, it's always been good talking to you down the years. Thanks ever so much for speaking to us today. Do appreciate it.
Thank you.
Some other business news stories for you now. And Sky News understands that Richard Masters, the chief executive of the Premier League, has told clubs he wants to put a proposed £915 million new financial distribution deal to a vote this month, despite being yet to reach agreement with clubs about their respective financial commitments. Well, the news first revealed by our City editor, Mark Kleinman, comes at a delicate time for the Premier League, with legislation to establish an independent English football regulator expected to be included in next week's King's Speech. Next today raised its full-year profits forecast for the fourth time in 6 months. The fashion retailer now expects pre-tax profits before one-off items for the year to the end of January next year to come in at £885 million. That's £10 million more than it was previously forecasting. Well, the news came as Next reported that its full-price sales in August, September and October were up 4% on the same period last year and better than the 2% growth it had been expecting. Next cited a cooler-than-average August and typical autumn weather in October, October for the sales lift rather than any underlying changes in the consumer economy. Shares have risen by 3%. The drugs giant GSK has said that sales and profits this year will be better than expected. Well, Britain's second largest pharmaceutical company, which had already raised its forecast once this year, highlighted a strong performance from its vaccine division, which in the 3 months to the end of September enjoyed a 33% rise in year-on-year sales. In particular, Arexvy, which is its vaccine for respiratory syncytial virus, well, that generated sales of £709 million during the quarter. And revenue from the shingles vaccine Shingrix came in at £825 million. That was up 15% on the same period last year. Closing arguments are underway in the New York trial of Sam Bankman-Fried, the founder of FTX, the crashed cryptocurrency exchange. Prosecutors have accused Mr Bankman-Fried of stealing $8 billion from FTX's customers in one of the biggest financial frauds in US history. Mr Bankman-Fried's defence was concluded last night after he spent 3 days in the witness box being cross-examined. He's pleaded not guilty to 2 charges of fraud and 5 of conspiracy. And if you scan the QR code at the bottom of your screen right now, you can find out more about the future of the flexible workplace provider WeWork. There are reports that the firm, which once commanded a valuation of $47 billion could file for bankruptcy protection as early as next week. So do scan the QR code at the bottom of the screen now if you want to read what I've written about that. Now, new research suggests that around half of us feel that reading a book is the best way to relax, but struggle to find the time. Over 30% of people, when asked, said they would love to write a novel, but again, would struggle to find the time. Well, joining me now to talk about this is the best-selling author, Sir Ian Rankin. Sir Ian, very good to see you this afternoon. You've got a new thriller, short-form thriller, out The Rise, out today, specifically to address this issue.
Yeah, I mean, we keep being told that people's attention spans are getting shorter. We live busier lives, faster lives all the time. You would think short form fiction would be the way to go. Short stories can keep you going on a tube journey, a bus journey, or you can listen to them in the car on your way to or from work or whatever. So I was asked by Amazon if I would consider writing a story that could be read in about an hour and a half, or listened to on the audio version in about an hour and a half. And I just thought, yeah, why not? Give it a go. And it's a story that it's called The Rise, and it's a high-rise block in London. It's sort of one of these steel and metal and glass blocks that where apartments start at 10 million and climb up towards 7-8 figures. And the people who live there don't always want their doings looked into. But suddenly murder erupts and the cops arrive, and you've got this motley crew who are all suspects.
I mean, most of your novels are obviously set in Edinburgh. Those are the ones that people associate you with. How difficult was it to sort of transport yourself down to London, as it were?
Well, I lived in London when I was first married, and we were terribly poor. We lived in Tottenham and I worked in Crystal Palace. It was a 90-minute each-way commute, and it was a nightmare. So I've seen that side of London. But now that I've got a bit of money in my pockets, London is a lovely place to visit. But I do, whenever I visit London, you end up going past these big new buildings and there's security guards on the door and CCTV, but no sign of anybody actually living there. And you always hear stories in the financial press, and lots of financial journalists have written books and chapters and books about this, about dark money flowing into London, flowing out again. Nobody knows where it comes from. Nobody knows where it goes. And a lot of the people who own these apartment buildings and these apartments themselves want to keep their affairs to themselves. They're very secretive, private people. So I just wanted to shine a little bit of light on that, and this gave me the chance to do it.
Did you have to do a lot of research on those sort of topics?
I was lucky that back in August, I interviewed a financial journalist, Oliver Bullock, who's written books on this subject. And so I think I was picking his brains more than he suspected when I was chairing his interview.
What are the challenges in writing a short novel like this? I mean, did you have to leave a lot of material on the cutting room floor, a lot of your ideas?
Yeah, it's tough. Concision is your friend, so you have to be almost like a poet and just pare each word away. If a word isn't working, if a word is superfluous, get rid of it. In a novel, you don't always have to be quite that focused. But here, yeah, every word has to work hard, and characters have to work hard, and you've got to get into the character very quickly. You can't have too big a cast of characters or people will get lost. You can't have the subplots that I often have in my full-length books. We had to be kind of focused and driven along this main path. But there was room for red herrings, room for suspects, room for a police investigation, and hopefully room for a little bit of satirical political commentary on the state of the finance industry in London.
Well, I look forward to hearing more about that. So, Ian, best of luck with the book, and thanks for joining me today. Do appreciate it.
Thanks.
Still to come here on Business Live, we'll have a look at how the markets are doing this Wednesday afternoon. Don't go away.
I found out a couple of years ago, to my shock, and I think maybe the viewers will be shocked, that still up to 2,000 dogs in the UK are tested on, you know, a year. So I drove up to this place, which is a legal puppy farm called MBR Acres, and handcuffed myself to the gates. There I am.
Yeah. I
know, in my dad's coat. And there he is, look at him. And because I just thought people really need to know about this. I was so shocked. And the more I've looked into it, we don't need to be doing these tests on dogs. They're called a secondary species. In fact, there was a world conference in Toronto about 3 months ago where representatives from the big pharma companies, you know, who are normally seen as the baddies, AstraZeneca, Pfizer, stood up and said, we don't want to do these tests on the second species, and dogs fall under that remit. I think gone are the days when people are like, well, yes, but, you know, it'll save my grandmother, so I don't mind torturing an animal to save my grandmother. But actually, it's over 90% of the tests they do on animals, when it gets to human trials, they fail. So, you know, that's not a great... There's a 10% pass rate if you were a driving instructor. You'd go somewhere else. You know, non-animal testing methods, over 90%, they pass, they go on. So I'm launching a petition, parliamentary petition, asking for the immediate ban of testing on dogs. Well, if you can go to my social media, you can find a link to the petition. But also, this is just the beginning. You know, I think people are I was so outraged. We need to know that this is happening in this country. So people, the first step is to sign this petition, show the government of the day.
The 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
I just took a shower above the clouds. You know why? Because this is the Emirates A380. Fly Emirates, fly better.
Well, European equity markets have enjoyed a positive start to the new month, traditionally one of the best months of the year for equities. Here's how the main continental European indices have finished today, all of them solidly in positive territory. But one of the big talking points today was the Danish renewables giant Ørsted. The shares have fallen by nearly 26% in Copenhagen. That's after it halted 2 US offshore wind projects and took a big impairment charge. Of course, BP did something similar yesterday. Here in London, similar picture. The FTSE's finished up 0.25% in a broad-based rally. Some of the oil majors come to the rescue there. Next is the leading blue-chip gainer on its results, some 3.5% to the good one. Marks & Spencer is up by almost as much in sympathy. Meanwhile, Airtel Africa continues to be sought following its recent results earlier this week. The shares there ahead another 4.5%. To the downside, well, Standard Chartered has finished down by almost 3%, continuing to come under pressure following last week's poorly received trading update. Outside the FTSE, the specialist engineering group Spectris has finished up nearly 0.5%. That had a trading update yesterday that went down quite well. To the downside, Aston Martin Lagonda is off by 11% after it warned of lower volumes than expected this year. Over on Wall Street, well, stocks are edging higher ahead of this evening's interest rate decision from the US Federal Reserve. We're not expecting any change in policy there. Among the features, well, I mentioned earlier on WeWork, which I've written about for the Sky News website and digital platforms today. The shares there have halved to an all-time low amid reports that it's set to file for bankruptcy. To the upside, Advanced Micro Devices is ahead by some 7.5% following an upbeat trading statement. On the foreign exchange markets, well, the big story by far this week has continued to be the Japanese yen. It's fallen to a near 33-year low against the US dollar. That was after the Bank of Japan proved less hawkish than expected yesterday. Sterling off 0.25% against the dollar, up by 1/6% against the euro. The single currency, meanwhile, off by 2/5% against the greenback. As for the oil price, well, at one point today, that hit its lowest level since the 6th of October, which, of course, was the day before Hamas terrorists attacked Israel. Barrel of Brent crude currently changing hands at $85.56 a barrel. That's up a little under 0.2%. Joining me this afternoon is Georgina Cooper, UK Equity Portfolio Manager at Newton Investment Manager. Georgina, great to see you. Lots going on here today. What about next? I mean, another stellar performance.
Yeah, absolutely. I think it's its fourth upgrade in the last 6 months. Clearly, they're seeing that the consumer is remaining resilient. And I think, you know, for as long as there is wage growth, the consumer is likely to keep spending. And Next are very much benefiting from that. But I guess across the retail space, that's not always the case. You know, we've also had ASOS report this morning and revising sales downward. And I think the difference there is retail's really seeing the difference between those winners and losers now in these markets. You know, ASOS is a pure online player that benefited massively from the COVID pandemic and the penetration of online sales really picking up during that period. And they're now having to manage that normalisation as we've gone back to a more normal lifestyle. Next, on the other hand, operates under a really impressive omni-channel model, so is able to mitigate that a lot better and be able to still capture the strength of that consumer through its multi-channel operations. Yeah,
another earnings updates are coming thick and fast in the United States right now. One that caught your eye was Estée Lauder today.
Yeah, absolutely. I mean, so that's warned before today. Clearly, 25% of its sales come from China, but actually over 75% of its growth is generated by China. So the strength and the recovery of that Chinese consumer is really important. Estée Lauder had to address a inventory write-down, which they believed was the correct thing to do to right-size that issue where, you know, we've gone through a period where inventory levels got very high on the back of that higher demand. Unfortunately, the visibility that we have on that stock channel is really hard to gauge, and it seems that sell-out that Estée Lauder expected is taking longer than expected. I think the incremental news today is around the health of that Chinese consumer and whether or not this is an Estée Lauder specific issue or if actually the recovery of that Chinese consumer is taking much longer to come through and therefore if there will be a knock-on impact to other luxury names.
Yes, now obviously closer to home tomorrow we get the latest interest rate decision from the Bank of England. Like the Fed, we're not expecting any changes. What will you be looking out for?
Yeah, I mean, I think the market has started to believe that we're reaching sort of the end of those interest rate hikes, but similarly that we are expecting interest rates to stay higher for longer. I think the narrative has now moved on to what happens to the consumer, what happens to the economy, and whether or not we get a soft landing or if it's a hard landing, and therefore the future responses that we should expect from the Bank of England from there. I mean, as we currently stand, we're probably in a position where a soft landing is looking more likely. You know, as I said, wage growth is still very strong. Companies are well capitalised. Yes, we're seeing a bit of turbulence in earnings at the moment, but it's relatively well contained if we say, for example, look back at the last crisis. So that is certainly where we're currently positioned.
OK, Georgina, got to leave it there. Great to see you this afternoon. Thank you. That's it from me. I'm back with the next edition of Business Live tomorrow morning at 11:30. Hope to see you then. Do stay tuned. Simon Morrison's coming up next. Cheerio.